Hello everyone, I'm happy to see you here once again. The educational series, has provided an informative and useful video about variable life insurance. Here, we will try to cover all about variable life insurance, including what is variable life insurance, what is the process of variable life insurance, the advantages and disadvantages of variable life insurance, variable life insurance death benefit, how premiums for variable universal life insurance are flexible, variable life insurance has a cash value that can be withdrawn, and much more. For your kind information, this series has been made only for educational purpose. For any doubt, you can use the comment section. We will try our best. Let's get right to the topic without wasting any time. What is variable life insurance? When you buy variable life insurance, you are purchasing a permanent life insurance policy, which means that the coverage will remain in effect for the rest of your life as long as the premiums are paid. Generally speaking, every variable life insurance policy is composed of three primary components. Beneficiary in the event of death. The monetary value. Premium. A death benefit is the amount of money that is left to your beneficiaries after you die. The cost of insurance and insurer's fees, as well as a portion of your premium payment, are deducted from your payment to keep the death benefit in place. The remaining portion of the premium is applied to the policy's cash value, which has a structure that is similar to that of a brokerage account. The cash value can be used to invest in certain securities that are similar to mutual funds, such as stocks and bonds. The cash value of the policy can be used to increase the death benefit, be withdrawn as cash, or be used as collateral for a loan, depending on how well it does. If you decide to surrender your insurance coverage to your insurer, the cash value is the amount of money you would receive in exchange for your coverage. What is the process of variable life insurance? A variable life insurance policy works in the same way as other types of life insurance in that it pays a specific amount to your beneficiaries, such as your family, after you die. In most cases, the death benefit for a variable life insurance policy exceeds the amount of premiums that have been paid. Variable life insurance includes a cash value component whose value fluctuates in response to the following factors: amount of premiums that have been paid, loans or withdrawals made by the policyholder from the cash value of the policy, the performance of the investments linked to the policy, invoiced by the insurance company, these fees and expenses. One distinction between variable life insurance and other types of policies is that it gives the policyholder the ability to choose how to invest the money received. It is possible for the cash value investment account of a variable life insurance policy to contain dozens of sub-accounts. A portion of the premiums can also be deposited into a non-investment account, also known as a fixed account, which earns interest on the money that is deposited there. You must pay a certain amount of premiums, or maintain a certain amount of cash value in order to cover the fees and expenses charged by the insurance policy. The advantages and disadvantages of variable life insurance. Considering whether or not variable life insurance is right for you. That will most likely depend on your personal preferences as well as your financial situation. We'll go over the advantages and disadvantages in more detail below. Pros. Variable life insurance policies have a number of significant advantages, including the following. Financial security for you and your family. When it comes to end-of-life expenses and providing a financial cushion for your family in the event that you pass away, any type of life insurance policy can be beneficial. Variable life insurance accounts still provide a death benefit, despite the increased risk involved. A death benefit that may be increasing in value. It is possible that you will have the option to convert your cash value into a higher death benefit amount while you are still alive, so that when you pass away, your beneficiaries receive a larger payout from the policy. They will be better off. Flexibility and a wide range of options when it comes to deciding where to invest their money. Policyholders have a number of options to choose from. Cons. There are some disadvantages to variable life insurance, just as there are with anything else. The following are examples of disadvantages. Capped returns. A variable life policy's cash value cannot be increased in excess of the amount of money invested in it. This is in contrast to other investments such as stocks and bonds. Premiums that are prohibitively expensive. Variable life insurance premiums are generally more expensive than those for other types of life insurance, and you may also be required to pay management fees for your investments. Because the market is volatile, you may find yourself with less cash value at the end of the year if the market has a bad year. Only a few investment options are available. You will most likely be able to choose from a limited number of funds that operate similarly to mutual funds. If the funds available to you are insufficient to meet your needs, you may be better off investing outside of a variable life insurance policy instead. Variable life insurance death benefit. The death benefit of a variable life insurance policy is typically structured in one of two ways. First, it can be structured as a cash value, or second, it can be structured as a lump sum. Level death benefit. When you purchase a life insurance policy, the death benefit is equal to the face value of the policy when you purchase it. Face amount plus cash value. Your beneficiaries will receive your cash value in addition to the face value of the policy if you choose this option, which will increase the cost of your policy. Other death benefit structures, such as an amount equal to the policy's face value plus all premiums paid, are available with some variable life insurance policies. But these are the two that are the most common. No matter how your death benefit structure is set up, you should always double-check the actual terms of the policy. In addition, you should confirm whether the death benefit is guaranteed. And, if so, whether the guaranteed value is the same as the projected value of the benefit. When it comes to death benefits, they are essentially targets, based on assumptions about future cash value performance, such as a 4% annual rate of return. When you die, the insurer expects that the cash value of the policy will equal the face value of the policy, assuming that it earns the projected rate of return. However, depending on the terms of your policy, if your cash value significantly underperforms, it may result in a reduction in your actual death benefit. How premiums for variable universal life insurance are flexible in the following ways. In contrast to variable life insurance policies, variable universal life insurance policies have a cash value structure that allows you to use the cash value to pay premiums. Additionally, you can choose to pay a higher amount in premiums if you so desire. As a result, these policies are sometimes referred to as variable premium life insurance with a flexible premium. While variable universal life insurance policies typically have a minimum and maximum premium amount, you are free to pay whatever amount you want as long as it falls within the policy's minimum and maximum premium amounts. This means that you can do the following. 1. Deferring payment of premiums, if you have enough cash value. You can use it to cover the entire amount of the premium. 2. Pay a portion of your premiums. For example, if your monthly premium is $400, you can choose to pay $200 out of pocket and use your cash value to cover the remaining $400. This option is typically only available once the cash value of your property has reached a certain minimum threshold. 3. Paying more than your target premium allows you to overfund your policy's cash value early on, allowing you to reap the benefits of investment gains more quickly. In general, this option is preferred if you earn a substantial income and want the option of not having to pay premiums in the future, such as during retirement. Single premium variable universal life insurance policies are also available, which allow you to purchase coverage and fund the policy's cash value with a single payment. Essentially, you purchase insurance and make all of your required cash value contributions all at the same time. You do, however, have the option of increasing your contribution to the policy's cash value if you so desire. Variable life insurance has a cash value that can be withdrawn. The cash policy of a variable life insurance policy differs from the cash policy of a whole life insurance policy or an indexed universal life insurance policy. There are approximately 20 to 30 investment options for the cash value of each variable life policy detailed in a prospectus. These investment options are similar to mutual funds in that there is a specific set of securities in which the money would be invested, such as bonds, mutual funds, and other securities. A money market fund. Bonds. A diversified portfolio of stocks, such as an emerging markets mutual fund. In addition, variable life insurance policies typically include an investment option with a fixed interest rate provided by the insurer. You will be charged management fees, which are similar to the expense ratios charged by mutual funds, regardless of which option you choose. It is possible that these fees will be quite high if the money is being actively invested, and they will vary depending on the securities being purchased. Finally, in this whole series, we discussed about variable life insurance, including what is variable life insurance, what is the process of variable life insurance, the advantages and disadvantages of variable life insurance, variable life insurance death benefit, how premiums for variable universal life insurance are flexible, variable life insurance has a cash value that can be withdrawn, and much more. Hope you understand and found this series more informative and useful. Thanks for joining us, hope you have a beautiful day.